The stock market keeps breaking new records, but something feels off. Investors are making money hand over fist, but now, many are starting to get nervous. Historically, the stock market returns about 12% a year. But recently, we've seen double that growth. So what's really going on here? Is this a golden age for stocks, or are we sitting on a ticking time bomb? In this video, I'm going to break it all down into 3 key questions. Keycap 1: Is the stock market actually overvalued? Keycap 2: Why has the stock market been booming while the economy is lagging? Keycap 3: How do you actually invest, and when, in this volatile market? Stay with me until the end, because this could mean the difference between building wealth or losing everything. First, let's look at the numbers. The economy is measured by something called GDP, Gross Domestic Product. Over the last 50 years, GDP has grown at an average of a little over 3% per year. But from 2019 to 2024, GDP grew at just 2.68%, well below the historical average. Meanwhile, the stock market? It's been growing faster than ever. See the problem? The stock market is booming while the economy is slowing down. This is where things start getting dangerous. The stock market is not just about numbers, it's about emotions. When people are greedy, they buy more, pushing stocks up. When people are fearful, they sell, causing stocks to crash. Right now, the Fear and Greed Index is showing that investors are getting more bearish every week. Bearish equals people expect the market to go down. Bullish equals people expect the market to go up. Historically, when investor fear rises while stock prices keep climbing, that's a warning sign. So now we've got 2 big red flags. Keycap 1: Stock prices growing faster than the economy. Keycap 2: Investors starting to feel nervous. But that's not all. Let's look at valuations. Wall Street talks a lot about multiples, but what does that actually mean? Think of it like this. If a company makes $100 in profit, how much are you willing to pay for that company? Historically, the stock market has sold for about 15 times earnings. Right now, that number is closer to 30 times earnings, double the historical average. That means people are paying twice as much for stocks as they normally would. So the stock market is expensive, investor emotions are shifting, and the economy isn't keeping up. This is why people are starting to ask, is a market crash coming? Let's take a step back. Why has the stock market been growing so fast? There are 3 big reasons. During the pandemic, the US government printed trillions of dollars. That money flooded into the economy, and a lot of it went into the stock market. In 1990, only 25% of Americans owned stocks. Today, it's over 58%. Apps like Robinhood made it easier than ever to trade stocks. Millennials and Gen Z are entering the market like never before. They're investing in Tesla, Nvidia, AI stocks, and meme stocks, pushing prices even higher. So we have more people trading, more money in the market, and a surge of young investors. That's why stocks have been going up so fast. But remember, markets don't just go up forever. So now the big question. How do you actually invest in a market like this? 2 main strategies. Keycap 1: Passive investing, less risk, long-term growth. Keycap 2: Active investing, more risk, higher potential rewards. If you want to build wealth steadily, passive investing is your best bet. Instead of picking individual stocks, invest in ETFs like Checkmark SPY, the S&P 500, 500 largest companies in the US, Checkmark VU, another S&P 500 ETF, same thing. Just Vanguard's version. The key? Always be buying AB. Set up automatic investments every month, no matter what the market is doing. This strategy has been proven to build wealth over time. If you want to take a more active role, you need to find market shifts before everyone else. Here are some big trends happening right now. Checkmark AI and quantum computing. Companies leading this will dominate the next decade. Checkmark defense and military stocks. Trump's policies could drive billions into defense contracts. Checkmark financial deregulation. Banks could see a huge boost if regulations loosen. But be careful, this strategy takes time, research, and discipline. If you're not willing to put in the work, stick to passive investing. Let's sum it up. The stock market is expensive. Investor fear is rising. The economy isn't keeping up. Does that mean a crash is coming? Nobody knows. Markets go up and down, but over time, they've always recovered. The key is to have a plan. Checkmark if you want to be passive, keep investing regularly. Checkmark if you want to be active, study trends and move early. Now I want to hear from you. Do you think we're in a bubble? Are you worried about a market crash? Drop a comment below. Like this video, subscribe, and hit the bell for more investing insights.